Welcome to the hot seat. I'm Meg Meurer, and I'm really excited about the episode that we have for today. We're going to spend some time talking about the art of bringing sellers and buyers together to successfully get a deal done. So joining me today from our internal team is Stephen Joest, Vice President on our execution team, and Davis Looney, Director of New Business Development on our commercial team. Gentlemen, welcome to the hot seat.
Great to be with you, Meg.
Glad to be here as well.
Thanks so much for joining and spending the next hour with us. I'm really excited about this conversation because, buyer point of views to get a deal done and seller perspectives really in what matters most when taking your company to market, two very different perspectives. And oftentimes it really does take an art, right, to bring buyers and sellers together to accomplish a successful transaction. And so I think you both will have some great perspectives to share relative to your seats on each side of the table. So maybe just to get started, Davis, if you could provide a little bit of background on your role in the M&A process and at Tenney Group.
Yeah. So I've been with Tenney Group almost 4 years now. I actually started the same day as Stephen Joest. So I've been in his shadow for 4 years now. And my role is to source new clients for us. So I spend a lot of my time just either in person around an event or just over a Zoom call, just getting to know owners of different trucking and logistics companies across the country, understanding the ins and outs of their business, and initially just helping them understand, what the market looks like and what it takes to successfully exit a trucking business. And ultimately, when the time comes to actually, press go on that, I kind of help negotiate our contracts and onboard new clients. And then I pass them over to the highly sophisticated deal team, usually led by Stephen Joest or Ashesh Bansurya.
I heard you're great at entertaining clients too, and you enjoy golf courses. Is that a fair statement?
If I can find a way to work anything into a round of golf, I will do whatever I can to make that happen. Or a fishing trip, we can get creative. Anything to keep me out of an office, more or less. Yeah.
I like it. That's awesome. Thank you. Stephen, what about you? Your role in M&A and with the Tenney organization?
Yeah, sure, Meg. Well, as Davis alluded to, once we execute the handoff, our team is really responsible for all phases of deal execution. So pre-marketing, kind of getting folks ready to go, understanding the key story, understanding the financial and operational narrative, and ultimately kind of where we see the market of potential transportation and logistics buyers being excited about an opportunity and just getting to know our client, their goals, and just ensuring that the way we go to market is going to honor the outcomes that they desire and ultimately create the best odds of success for our clients. And so from there, we go to market, we engage with an appropriate number of parties depending on the process, ultimately look to generate options for our clients and really just create clarity and context for all parties to efficiently screen opportunities. And then from there, once we have an opportunity under letter of intent, kind of shepherd the client through the due diligence and purchase agreement process, partnering with attorneys, CPAs, other advisors, and ideally getting to the closing table and getting to celebrate and help our client enjoy that next chapter of life.
Yeah, it's really exciting and great to hear the different stories of how they're spending their time after a transaction as well, ways in which they've given back to their community and their employees. It's probably one of my favorite parts of the job. So, Stephen, I would say working with you has been a real treat over my last 6 months joining Tenney Group. I would say I've worked with a lot of different CPAs in my background in transportation, and I would argue you're probably one of the most detail-oriented CPAs I've ever had the opportunity or privilege to work with. So maybe share with the audience a little bit about your background even before joining Tenney Group.
Sure. Well, I thought you were going to tell me I had a lot of personality for a CPA, but instead you went the route of I'm really detailed for a CPA. So setting my excitement
You're a great
aside,
personality, Stephen. Yeah.
Setting my pride and excitement aside for a second. No, so my background, I come from a kind of a CPA audit track, so had almost 4.5 great years with Deloitte in Nashville. So I think from a financial standpoint, from a process standpoint, and just understanding how varying sizes of organizations and varying industries, approach the capital markets, report to the capital markets, and ultimately, the integrity of data was obviously paramount, but also just getting to work with a ton of incredible people on my team and in our office, and then just nationally and internationally with a company like Deloitte. Just a fantastic place to start. And then about 4.5 years into that, and as my wife and I were had been married for a few years and we're starting a family, had a friendship with Eric Heath, our senior vice president. They were looking to grow the team, and opportunity came up, and I got a wild hair and decided to try my hand at transportation M&A.
Love it. That's great. So Davis, I'm going to kick it off with you. Can you share a little bit more about the types of deals that you're seeing in the market? Really, what's hot? What's in high demand right now from your perspective, and the conversations that you're having out in the field?
Yeah, I'll start just by saying, the deals that we typically work on are going to be, roughly $20 to $300 million in annual revenue, and that could be a myriad of different, ownership structures. Could be everything from a family-owned company that started with a truck and a credit card to a private equity-backed business who's looking to sell for the second or third time. Right now it's been a interesting year on the freight front. So, everyone is experiencing that at different levels, to the extent that a downturn in freight volumes has impacted their customers. We've seen everything from people that are having great years and growing to people that have really had their legs cut out from them. So, it's made it an interesting deal environment in that coming out of the last 2 years, a lot of buyers, larger strategics were still well capitalized. They've made a lot of money in a really strong freight environment and have been looking to deploy that into, either opportunities to diversify their customer base or their service base, and also just to acquire some solid companies to de-risk themselves in a potentially forward-looking volatile environment. So I would say that, we've seen a lot of activity recently. We had a final mile courier deal that we closed. We had a dry bulk carrier that we closed, and we had a freight brokerage that we closed, and a intermodal drayage deal that we closed. All of those are, verticals that we were excited about last year, and we continue to be excited about forward looking. So it's been less about any specific mode that's been exciting, and it's more been about, what that management team looks like, what that customer base looks like, and, what that owner wants the next season of their life to look like post-transaction.
Yeah, great. No, that's wonderful. So Stephen, on the buyer side, certainly that buyer pool also continues to grow, and growth via acquisition remains top of mind for a lot of strategics in our space. Kind of talk to us. I mean, despite the macro environment and the freight environment that Davis just mentioned over the past year, what are you hearing from buyers that are continuing to explore really investing in the T&L space right now?
Sure. So would certainly echo several of the sentiments that Davis alluded to in his comments. For those that have been operating in, advising in, investing in this sector, well familiar at this point in the volatility in the macro environment and the freight environment that really started late last year and certainly has come on fairly heavily through this year. And I think by most accounts, I think sort of stabilizing at or near, hopefully a bottom currently, and looking up into next year, starting to hear some optimism in comments on earnings calls and so forth. So that's certainly encouraging. And I think stability is certainly one catalyst for deal flow, volatility being more of a headwind. So I think by all accounts, we've gotten through some of the worst, just from a peak uncertainty perspective. But to Davis's point, I think strategics are faring very well and are very opportunistic in the current market. I think coming off of 2021 and 2022 from a rate and equipment market standpoint, pretty well capitalized in most cases. So I think you're starting to see some pretty opportunistic plays there to acquire, grow organically, buy back shares, etc. And then I think you're also still seeing other folks outside of the strategic pool, whether that's private equity groups with a little bit of a newfound curiosity in the logistics space. I think the global supply chain disruption, through and post COVID, really perked up the eyes and ears of a number of folks that had not previously considered investing in the space. So I think
Yeah.
seeing some newfound interest in a variety of different ways. And then I think also still seeing some interest from more of the private fleet side. So shippers or others that have an existing fleet or are curious about starting one, just to continue to grab more and more control of their supply chain and mitigate risk of some of the disruption that we've experienced the last few years. So I think still seeing that interest, but I would say today, strategics are certainly a key pool for us. And really taking a step back, obviously there's a lot to say about COVID and post-COVID trends and kind of where we're getting out of that. But independent of COVID, I think there's certainly a wave of consolidation in the space. I think there's just immense benefits to scale. There's an aging population of owners, et cetera. So I think those documented reasons are still alive and well, still, longer term tailwinds, so to speak, for deal flow. And so certainly still experiencing those as well.
Yeah, no, I think that's great. Finally starting to see tender rejection rates raise, right? Hopefully that's a sign that the bottoming out has happened and we're on the right trajectory, certainly. I like your comment about shippers too, because oftentimes when we're in the field and we're talking to prospective sellers, it's a group of buyers that they don't necessarily think about frequently, right? And we've done some interesting deals with Ashley Furniture and Red Bull, where they wanted to vertically integrate their supply chain by acquiring transportation companies. And certainly, I think there's more in that space. So that's always an interesting conversation when we're meeting with prospective sellers as well. Great overview, Stephen. So Davis, what are sellers really looking to accomplish during transitionary periods? I think you'd have a lot of great perspective here. Maybe walk us through not only obviously the economic needs of the sellers, but maybe some non-economic needs as well that are usually part of these transactions.
Yeah, I would say that on the front end of any conversation, which is actually similar to what Joest and his team actually tries to uncover with a buyer, is I'm trying to understand, what from a total consideration is an owner's expectation. What do they need? How are they willing to receive that? And what ultimately do they want to the next season of their life to look like? And so for some owners, they have brought the business to a place where, it's achieved some scale and they've created a successful, sustainable organization, but they know that in order for it to really continue growing, they need to, partner with a large organization that can provide additional resources that they're either unwilling to commit or, not able to access at this time. And so in that situation, we see a lot of folks who are excited to find someone that they culturally align with, that, they believe they can learn a lot from in this next season and sell the business on, to them, so where they can dive in and continue to see it grow. Other times there's, folks who ideally would like to sell the business, hand over the keys and hit the beach. And I completely respect that. That is not usually the play out that way. Usually there needs to be at least 6 months to a year of ownership management, being able to help transition the business successfully in order to de-risk that transaction for a buyer. But yeah, I think that on the front end, what we're trying to do is just make sure we're aligned on value expectations to the extent that is reasonable. Obviously, we can't have a crystal ball and say this is exactly to the dollar what a buyer is going to be willing to pay for this, and ultimately the market decides that. But based on the amount of transaction volume we see, we can have a pretty pretty detailed expectation of what that's going to look like, just to make sure that we're not going to work too early, and then also just helping understand the culture, what would someone what their business looks like in what they value and what they would like to see that next chapter of their life to look like, so that we can hopefully pair them with a buyer that appreciates those things and makes that, most likely to outcome available.
Yeah, no, I think that's great. We had one story from a couple years ago now that I always found interesting, which was a company that we had listed that was in a mid-sized market, probably on the smaller side. And the sellers, it was really important to them, not only the economic side of it, but the non-economic, which was our team, not only the executive team, but all of our employee base has great tenure with the organization. And we're in a small, mid-sized market. And it was really important for them that they stay in that market, right? And so for that specific transaction, they had a couple different offers, two of which were from very large publicly traded companies. They actually went with the second most economical option, right? Because they were going to keep that location and not relocate all of their employees. And so I think it's really great as we kind of unpack the needs of different sellers to really peel back the onion and understand, of course, there's a financial outcome that we're always striving to achieve, but there's usually secondary or tertiary needs that sometimes are equally, if not more important than the financial outcome for a lot of people that are selling. And so meeting the needs globally, right, or holistically for that seller are really, really important as part of the process. So Stephen, I'll flip it back to you just quickly. Is there anything specifically that you didn't hit on previously that you would say are key motivators for buyers looking to pursue acquisitions, specifically in TNL? Is there anything more you'd want to add to that?
Yeah. So one way to maybe think about this, just from the hundreds of buyer conversations we've had over the last several years, I would sort of maybe put motivation into a couple different buckets broadly. One being capacity, the other being capabilities, and the two are certainly not mutually exclusive. Meaning, I think there are some deals that are both capacity and capability motivated, but I think in different market conditions, the key driver of boards and investment committees and management teams pursuing and executing on M&A tends to be more motivated by one or the other. And I'll elaborate on those a bit. So from a capacity standpoint, typically we're talking about adding rolling stock, trucks, trailers, drivers, or just generally trying to increase our scale, achieve economies of scale, save on fuel, insurance, leverage driver recruiting, retention capabilities, et cetera. That is certainly one play. And then from a capability standpoint, that's probably more focused on the management team, IT, tech capabilities, customers, end markets, the diversification those could offer, just ways that you can either catalyze growth or de-risk the operating model from the buyer's perspective. So I think what we've seen over the last few years is in 2021 and 2, just given the tight driver and equipment markets, there was a lot of capacity motivation. Like, we have all this freight, we have great rates, we just need some of these other inputs that we can't just go get on our own. We can't snap our fingers. We can't just throw money at it. We need to acquire to be able to capitalize on these opportunities that are available, but within the window that they're available, we need to consider M&A. And then in the current environment, where I would say the driver market has loosened slightly, equipment is arguably a little bit more available, not cheaper certainly, but a little bit more available, just with OEMs catching back up from their supply chain constraints. I think that the pendulum has shifted more to a capability motivation. I think given that the tougher environment we're operating in, I think things like end market diversification, customer diversification, and just folks that operate in niches or spaces that are a little bit more enduringly profitable are attracting a bit more interest today than maybe other folks that were purely, hey, I need to add 100 trucks, or I need to open a brokerage office in this location. So I think that's a little bit of how I think about motivation and how that oscillates with market conditions.
Yeah, I think that's great. Yeah, revenue diversification essentially. And oftentimes we're seeing that in complementary or adjacent services, right? Where they're able to cross-sell with their current client base and kind of create a wider ecosystem for their customer base to live within. And so I think that's great insight. So Davis, we're gonna jump into bridging valuation gaps, right? And our team has certainly had to get creative whenever we're bridging those valuation gaps, certainly in the market today between buyers and sellers. So expectations have changed, certainly pre-COVID and post-COVID. Maybe talk a little bit about the valuation process, how we differentiate ourselves in the market, maybe highlight a little bit about our go-to-market strategy, or our meeting in Franklin, where a client typically comes to the office. Maybe just give us a high-level overview of Tenney Group and how we play in the space.
Yeah, I mean, I would say that rightly so. It's not typical that we have an initial conversation with someone and their expectation of value aligns with ours, and that is, like I said, rightly so. If you are pouring your blood, sweat, and tears into a company day after day for years, you should have a high expectation that it's going to drive a large outcome. So what we like to do is take a purely educational approach at the front end. If you have no desire to exit, I'd still love, in the next 10 years, I'd still love to have that conversation today, just to have, a kind of a level set expectation of like, hey, here's the value today. And then here's what we see that drives better outcomes as you build the business going forward.
Yeah.
So that we're not having that conversation, 10 years down the road when, they actually want to exit or need to exit. And that, any misconception around value is, kind of unpacked then. I'd rather get out ahead of that so that people can plan and build in in the direction that is going to benefit them most. So typically how we do that is, at a high level, just having a conversation where they can just dump all as much information as I can get out of them about just what they do, and what their customer base looks like, what their growth has looked like over a period of time, what their management team looks like, what growth is available to them, and then just taking a high level look at the last 3 years, P&L's most recent term balance sheet, maybe having an understanding of the assets and the value there at a high level, but really just trying to take a 30,000 foot view of everything and just say, hey, big picture here, this is where we would expect offers to be made if you were to go to market today. Here's some yellow flags maybe that would say, hey, it's not a deal breaker, but it might be something that if you're looking to continue building the business that we would suggest maybe pivot on. And hopefully this doesn't happen, but sometimes it does, where there's like, hey, there's a red flag here. And I'd rather get that out now and address it now rather than having spend time and money to go to market, have a buyer find it, and it crush the opportunity of a deal or negatively impact the amount of money that you can ultimately take home. So that's what we're trying to do on the front end, is just make sure that we're all aligned. And ultimately, once we bring on a client, Steve and his team do a phenomenal job diving in to really get under the hood of the business. And then we do a second round of that kind of initial estimated proceeds analysis where prior to going to market, we're actually diving in extremely deep again, laying out our list of buyers and saying, hey, before we actually bring this in front of a buyer, we'll just make sure we're all on the same page here. After everything we've learned, these are the buyers we think are going to be most interested. And this is, again, where we would estimate 80% of our offers to come in. So again, everything is transparent and we're just ensuring that alignment is maintained throughout the process.
Yeah, I love that. I mean, at that point of signing an engagement with us, and when an organization is ready to sell, we do invite our clients up to Franklin for an in-person meeting with our team, both the commercial team, but also our execution team. And that's really probably one of my favorite parts of the process because it is such an intimate, personal process, right? And so whenever you're able to sit around the table with the organization selling, but also their key advisors and our team together, that's a great go-to-market strategy meeting where we're co-creating that buyer list together. Confidentiality is just incredibly important in this space, right? Because in transportation, as we all know, everyone knows everyone. And so making sure that we create the right outreach because it is so personal That's really important, right? Our organization, we're not doing CRM blasts to 3,000 organizations. We're picking 30, 40 key contacts and personally going out and having direct conversations with individuals who we're meeting with on an ongoing basis. We're attending 40 to 50 industry events, right? And so we're trying to reverse engineer and understand the acquisition strategy of our buyers in advance of bringing the right type of relevant opportunities to them, which ultimately impacts the success rate, right? And so I think that's really important. I think that's great advice, Davis. And I would just add, even in your example, you said, hey, 10 years out, we can also help on value drivers, right? How do we increase
Sure.
value drivers over that time period? Just a quick example, I have a gentleman who is on a shorter path. He's probably 2 to 3 years out away from selling. And I met with him a couple months ago. And he said, Meg, we're finally to the point where we have a decent amount of overflow, tender initiations that I cannot accept on my assets. I really want to create a brokerage division, and I really want to help my customers further than I've been able to on my own assets today. And so part of his strategy is creating that brokerage, revenue diversification, profit diversification, and doing that in advance of a sale. And so we've also been able to, I think, add a lot of value to prospective sellers in advance of selling just by plugging them into our network, connecting them with different advisors, whether that's executive recruiters that specialize in the transportation space to build out their teams, CPAs, attorneys, tax specialists, wealth advisors. And that's all part of the educational process, like you mentioned, that can really better position prospective sellers when they are ready to go to market. So I think those are great comments, Davis. Thanks for sharing that. So Stephen, I know we're getting to the end here. We've certainly had to get creative, like I said, on a lot of deals, making sure that we bridge these gaps and actually close these transactions. And we have had some great success closing 4 deals in the last 120 days. So we've been able to do that. Maybe share with us ways in which we've been able to bridge those gaps from your perspective on the execution team, and how our team's been able to add value throughout that process of selling an organization.
Yeah, absolutely. So maybe to start with a general comment on creativity, certainly tempting, for me as a former CPA, for our team with a more technical analytical background, to really like to open the playbook of, the infinite number of possibilities to value and structure a transaction. And I think that's good. I think it's good to have those clubs in your bag. But from experience seeing dozens of deals actually close, I think what we find is the simplest form of an acceptable outcome for both parties is likely going to win the day. And so I think really just leaning in and listening to the goals of the parties, and then doing our job to create context around the information at play as they're making decisions around that. Is probably the best strategy, and really adding layers of structure if and only if necessary to try to solve for a material goal of one party or both parties in a transaction. But with that being said, I mean, certainly the evolution of the freight and capital markets in the last 12 months has necessitated some evolution and some creativity. And so, certainly on the asset-based side, as the used equipment market has swung pretty meaningfully lower, that, as you think about the capital structure of a transaction, historically speaking, or in certain environments, the majority, if not the totality of the debt can be supported by the value of the fleet. And when, that drops by 30 to 40%, you can certainly create, in many instances, a gap that you need to consider filling. And that gap can only be filled in so many ways. And ideally, the answer for our clients is not price reduction, right? So I think just knowing how to use thoughtfully structured subordinated debt, whether that's a seller note, whether that's mezz financing, things like preferred equity, just different ways that you can fill out the capital structure of a transaction that will allow for sufficient flexibility, risk allocation, et cetera, not only to get the deal done, but really allow the business to be, flexible enough and able to execute operationally through whatever environment that it's in. So I think that certainly has become more top of mind in the last few months as equipment rates have fallen, interest rates have risen. And then just from an earnings perspective, like to the extent you're looking at more of an income approach, when freight rates are volatile, when all measures of performance of transportation companies have been volatile through COVID. Aligning on what a normal view of earnings is has certainly been an interesting exercise, to say the least. So, we've really worked hard to think through where it makes sense to add structure, something like an earnout or other contingent consideration, that really provides a way to uh, you know mitigate that risk without just kind of forcing the parties to agree on a set number with
Sure.
the 100 factors that are impacting that historical data. So it's been interesting. Have had to get a bit more creative here recently, but certainly something that is enjoyable when done in the right kind of collaborative relational tone between the parties.
Yeah, no, I think that's great. And one of the questions that we get frequently is tell me a little bit about the process early on. So, whenever we have a client who's interested in going through this process with our organization, maybe give us a quick summary of maybe the first 30 days, that snapshot right out of the gate. What does that process look like, Stephen, that your team is running them through?
Yeah, absolutely. So we love to hit the ground running, immediately take a deep dive on financial and operational elements of the business, and then parlay that into ensuring that on the financial side, we've got a meaningful picture of historical and, where appropriate, forward looking results to present for context to the market. A pretty good overview of the operating model, really understanding what the key um, growth drivers and constraints to growth have been, just as we think through marketing strategy and who might make sense to approach with this opportunity. And
Sure.
then from there, weeks 3 and 4 are really very collaborative with our clients as we put the finishing pieces on marketing materials, on marketing strategy. And we really like to be out the door, around that 30-day mark.
Yeah.
And certainly if in instances where there's complexity, I think we want to get out the door right, but certainly speed is paramount,
Yeah.
just from the perspective of minimizing fatigue. So we really
Mhm.
like to align expectations with our client day zero, and then hit the ground running and make sure we're out the door on time.
That's great. All right. So, top piece of advice for sellers. So, maybe Davis, I'll start with you. What would you offer to folks that might look towards going, down this process with us in the near term?
Yeah, I would just say, it's never too early to have that initial conversation. I think, again, putting the right team together and knowing that you're starting at the right time is probably the largest indicator of success. We onboarded a client this morning that I've been talking to for probably a year and a half, and probably been the brakes for the majority of that time. But I guess we'll see. The business is in a much better place now, to where I think the outcome that they wanted, a year and a half ago is
Sure.
much more down the middle than, maybe the high side of reasonable then. And I think it's going to make just this a better, smoother process for everyone involved. And so I think just
Great.
having that initial conversation early is,
Mhm.
the most likely, puts you in a position to most likely have a successful outcome.
Sure. Yeah. What about you, Stephen? Any advice that you would offer to prospective sellers who are about to embark upon a process?
Yeah, I think it's important just to clearly define your goals for your exit, financial, non-financial,
Hmm.
and I would say just remain on those most important goals. Just remain principled on the goal, but flexible on the means. And so, I think there are often times where a seller can approach the market with a preconceived notion of some of the specifics of what a deal can look like, whether that's tax structure or structure of consideration, or whether I want to go approach a strategic versus a financial buyer, or some of the other things that you can have preconceived notions on. But I would say open-mindedness is key in terms of how the process is going to play out. But certainly being upfront with yourself, your team, your family, your advisor, all the key stakeholders on your
Yeah.
bench, so to speak, that are shepherding you and walking with you through the process. Being very upfront about what those goals are, so that holistically we can all come alongside you, support you, guide you towards those ends. I think obviously we can run a process that maximizes value, but to some of Meg's comments from earlier, that doesn't provide the off ramp to get you more time and capacity in your life, or it's not the right operational fit, or it's not right for your people, then we don't want to go focus on those options on your behalf. So I think having put some thought into that up front, and just being very open to that, and also just acknowledging that does evolve, that can evolve throughout a process. So just being, again, upfront with yourself and with your advisors as that does evolve throughout a process, that just allows us to be a better advisor and support you to whatever end the process leads.
Yeah, absolutely. All right, so we like to end the segment with a fun fact. So I know you guys aren't prepared for this question, but the question is, tell the audience a fun fact about yourself that they might not know. So with that, I will start with Davis. Davis, can you tell us a little bit something might be interesting about yourself or your background that our audience doesn't know about?
I will say that prior to Tenney Group, I spent 8 years in international nonprofit ministry work. So that led me to spend a little over a year in Uganda after college. And while there, I was baptized in the Nile River by a guy that was on season 2 of The Real World. So
That's interesting.
that's a pretty narrow niche fact there. Yeah.
No, that's great. You've done a lot of great work for nonprofits, and you've had a wonderful career and traveled the world, and you've got more stories than most. And it's a really neat background, Davis. What about you, Stephen?
So something that the audience probably has picked up on by now is that I am less interesting than Davis. Um, but something that, for a recovering CPA, I would say the most interesting concert I've been to was seeing Usher play in a minor league hockey arena in Northern Ireland. That
Wow.
was a unique experience for a guy like myself.
That's awesome. And congratulations, third baby on the way.
Thank you.
Very happy for you, Stephen. All right, guys. Well, that does it, folks. Thank you guys so much for both being here, both sides of the house, talking about kind of what helps bring buyers and sellers together. Thank you for educating us today. Until next time.